Welcome back. Let's invite the management of GNA Axles on our show now. The company's reported a steady set of earnings in Q3. The company's top line has gone up by 5% in Q3. On a 9-month basis, the revenues have gone up by nearly 2%. There is a margin expansion as a result of which the net profits have gone up by 13% in the current quarter. Ranbir Singh, Managing Director and CEO of GNA Axles, is now with us on the show. Mr. Singh, morning, and thank you for joining in. This is Reema here. So it's still slow growth, right? 5% for this quarter, 9% so far in FY25. Can you give us a breakup of the domestic market, tractors, how it's performed, and even the exports, Europe in particular? What were the key highlights?
Reema, very good morning, and thanks for inviting me in CNBC-TV18. Regarding our Q3, we have logged. It was slightly better than last year. As far as overall for first 9 months, it's not a great improvement, but some improvement is there in the margins. Regarding the market scenario in India, if you consider this domestic CV and tractor market, both are flat for first 9 months. Even CV, the only positive thing is that in Q3 CV, they were able to reduce their finished stocks. Instead of those are 55 days against 90 days. So they are anticipating slightly better production and sales in Q4. As of our tractor also, there is a good outlook for Q4. If we talk about the North American market, it is a plus by 15%, 15 to 20% than normal. And Europe is down by 15 to 20%. And plus Europe, especially the Germany and large economy countries, they are heading for a recession this year. That is what they are anticipating. So that's why our overall sales is not growing because domestic is flat, CV is flat, domestic tractor is flat, and Europe is down by 15 to 20%. Only North America is up by 15 to 20%.
Right, Mr. Singh. Good morning. This is Vinnii joining in the conversation as well. So you are highlighting that, Europe still continues to be under pressure. That's fallen almost 15%. So then this subduedness is expected to continue through FY26, given the indication that you're giving. And what is actually leading to the bit of an improvement in terms of margins? So 2 questions there.
Yeah, regarding the European market, it is anticipated because their financial year is from January to December. So this whole year they are anticipating the recession in this year. There is a transition in the gas supplies also. They have stopped from Russian area. So they are buying the more expensive gas, and inflation is going to up. They will face, at least during this transition period, this 1 year, they will face recession. Regarding our margins, we are this Q4, we have a good visibility, and we will be able to improve our top line also, and in this year we are anticipating to improve our margins between 10 to 12% as compared to last year.
Any numbers, Mr. Singh? You're saying in Q3 revenue growth should pick up. Are we looking at high single-digit kind of a revenue growth? And what would be the exit margin range?
Overall growth will be between 4 to 5%. Margin growth will be 10 to 12%.
Okay. And sir, just want to understand in terms of contribution that you have coming in from EVs at this point?
Yes, we are developing our components, similar components, and same category for same customers also, for new customers also. What we are targeting by 2030 will be our revenue from LV and EV will be more than 10 to 15%, more than 15%.
And when that happens, sir, will there be a change in the margin profile of the company?
Definitely in new segments, wherever we are entering into, those are with better margins.
So say in 3 years down the line, sir, what could the margins look like for the company? Could you inch up to 15%?
Actually, at this moment, our margins have dropped to 13.5 to 14%, which used to be 15% in EBITDA margins. So we are targeting 15 plus in the next 3 years' time.
Okay, so you want to revert back to 15% plus margins over the next 3 years. You spoke also about an improving outlook for CVs and tractors. I mean, you have visibility for Q4 at least. So in Q4, what would the domestic growth look like for you?
Domestic growth if we say take the average of 9 months, domestic growth will be a minimum 10% as compared to last 9 months.
So Q4 growth will be 10%?
10% as only Q4 growth will be 10% in domestic market.
Okay, in domestic market, you're expecting a 10% growth coming in Q4 is what you're watching out for. So I just want to take and highlight, last time when we had spoken to you, you had said that you're expecting FY27 and onwards a revenue growth of 8 to 10%. Does that still stand, given that we could see that weakness coming in the global markets?
In spite of weakness in the global market, we are mitigating our risk by adding more customers and more product range. So we are planning to, we are expecting the same growth, 8 to 10% from year 2027 onwards.
So 4 to 5% FY25, 10% FY27. What about FY26?
Actually, top line, actually baseline has grown quite high, so we cannot expect more than single-digit growth in years to come.
Okay, Mr. Singh, thank you so much for joining in with us and giving us an insight in terms of the outlook that we could be expecting for Q4 as well as FY26 and FY27. That was the management of GNA Axles joining in with us on the show.
Thank you very much, Vinnii. Thanks.
Thank you so much. Stock as of now down almost 3% in trade though. European market is something that is a pain point that is coming in for the company. But on that note, we're going to slip into a very short break. Don't go anywhere, because after the break, we'll return back and discuss the markets. So with Soni Patnaik on the technical front, so don't go anywhere.